Hi, everyone. Welcome to this week's special episode of LodeStar's Lending Leaders. We have on for you this week Dan Smith, VP of Sales from LendingPad. LendingPad is a LOS platform, a LodeStar partner, someone I've worked with in past jobs as well. So really excited to have Dan and his input into the industry today. Dan, thanks for joining. Would love to hear you talk a little bit kind of about yourself. You have a wealth of industry experience in the wonderful world of mortgage compliance and mortgage technology. So would be interested in hearing a little bit about that, and then we can kind of get into some industry things here.
Sounds great, Jim, and thanks for having me, and congratulations on the podcast.
Thank you.
But the short version of my background is I joined the mortgage industry like everyone joined the mortgage industry, and that is by accident.
Mm-hmm.
In my case, I was out of college, needed a job. I was didn't give a whole lot of forethought towards my career in college, strange as that may sound. But I was placed in a temp agency at a mortgage company, got different experience, transferred with them from one state to another, saw a different side of the business, and then quickly fell into mortgage tech. And prior to LendingPad, I had 20 years divided between Fiserv and also compliances. So background heavily on the sales side, but also in sort of the support, tech, consulting side of the business as well.
Mm-hmm. And so what you talked a little bit about what got you into the industry, but what's kept you around?
Yeah, great question. Probably like you, Jim, it's a small industry and yet it's very nuanced. It's complicated. It's a lot of fun. I like solving problems and I like building long-term relationships. And this industry affords the opportunity to do both and continues to change. So that's what's kept me engaged and why I'm still here and have the chance to talk with you.
Yeah, well, we appreciate you coming on. It's definitely a small industry that's kind of affects everything and affected by everything too. There's not a single person you can't talk to about real estate or mortgages or something related, because at the end of the day, everyone needs a place to live.
Yeah.
So you've been in mortgage technology during an interesting time of, I guess, Internet 2.0 into Internet 3.0 now, a lot of the changes that we've seen over the past few years. How have you seen the way lenders view technology differing as a necessary evil to actually embracing it? Like, how have those conversations you've had changed?
Good question. It's across the board on that. I think that there's actually been a migration towards more people thinking that it is not just a necessary evil, but actually a great tool to help facilitate business. Because after all, I mean, if we are focused on what we are doing, we are helping to facilitate the American dream. And it's been a highly convoluted process, and for good reason in many cases. But the ability to do that in a more elegant way is very exciting. And I think most folks recognize that tech has a big part of that today.
So you talked a little bit about lenders' view on technology, but what changes have you seen in mortgage technology since you first came into the industry?
Well, that's a good question. I've been in the industry, as we mentioned, for a while. So I don't know the abacus. Fast forward years forward, mechanized calculator. It's been an industry that has been somewhat slow in adopting new tech, but I think it may be helpful to think about why that may be. And I'd say there's probably 2 or 3 reasons why that may have been the case. One is that the industry is just very complicated and there's a lot of moving parts to it. Another is that there's a heavy sort of regulatory compliance burden that lenders have to adhere to. And the third is it's a very sales-driven business as well. And so there's a lot of focus on sales and getting the pipeline that you have through. And so those are all factors, I think, that on the one hand have maybe led to some hesitation to make changes, but they're actually factors that can be highly impacted in a positive way with technology. So those were some of the things that I think are worth exploring into how we've gotten to where we are today.
Yeah, well, yeah, that I think that's interesting. I mean, let's unpack that a little bit. In particular, the last one, the relationship and the sales focus is one that we talk about a lot here, which is this a technology business or is this a sales business? And how do you use technology to kind of improve relationships, right? You see a lot of lenders trying to turn this into a purely transactional business versus other people still focusing on the relationship. So how do you, view that both on your own end trying to sell into the industry as well as the clients you have and speak with?
Yeah. So I think the fact that technology can come in and play a role cannot have it replace the relationship side of things.
Mm-hmm.
And so I think there's probably of those things that are driving change today. There's the digitization of data has been a big factor, and how do you transfer to take advantage of that without sacrificing relationship? And then the other are maybe just changes in consumer expectations. So on the digitization of data side of things, when I think back to where my career began in the late 90s, I was at Old Kent Mortgage Company, and literally one of the tasks that I had was standing up those bankers boxes, and that was the data retention plan. I mean, it was putting them in boxes, and I'm still, by the way, very adept at standing up those boxes quickly. So those were not wasted years. And in fact, that's a good party trick, is look at me put a box together quickly. But when it's revelatory, when you think about where we are now, and we take for granted sort of data, just electronic data, but being able to take that data and put it into verifiable data. You've got technology like OCR having come along, and data capturing. But if you're moving towards verified data and the use of APIs, that's something that is going to continue to evolve and can ultimately, again, benefit those consumer relationships.
Well, what is that? Let's unpack that a little bit, but also when I was working with my family's title company in the early 2000s, filling up boxes and getting closing documents into a storage warehouse was a big part of my job as well. So we have that in common. So happy I don't have to move boxes or deal with hand trucks anymore, but definitely gives you a good appreciation of where we've come in the industry. So make the connection for me of OCR to a customer relationship, right? I get that we have less paper now, everything's digital, but how does that translate into a better relationship or even more time that a loan officer has with a consumer?
Yeah, it's a good question. I think a lot of it is the industry just getting organized. So even something like MISMO and vendors agreeing to use a uniform language. I mean, if you're using MISMO, you probably had an easier transition with IRLA. If you have an easier transition with IRLA, you're probably providing a better consumer experience to your constituents. And so, back to the consumer expectation side of things, I think that consumers are increasingly expecting this convoluted process to be trimmed down and made more simple, so that you talk about giving time back. It's time back to the consumer because the process is simplified, and it's also then time that can be focused on the relationship without having to deal with all of the friction that's involved in the relationship.
And with those consumer expectations, do you feel that's driving the lender to behave differently? Because I'm going to push you a little bit there, because I feel like, at least with folks I know and people who are first-time home buyers, there's just not a lot of things that they expect about the industry, for better or for worse. So that transparency, that clarity isn't always there. So it could be different after the fact, but people don't really know what to expect. It causes them to kind of go with recommendations they get from the first person they talk to, typically a realtor. And then it leads, in my opinion, to folks after they close on a house to be frustrated with the process, but happy it's over, right? So how is that? How do you feel that that's changing?
Well, there's an educational component. And by the way, I like that I think you're one of the leaders that focus on, what is it from the consumer point of view, even so far as having a prospective home buyer on your podcast, Sarah Quinn. And I think when I think about that too, we in the industry, we've been through it many times. What does it look like for the especially first time borrower? But actually, even if it's not the first time, the whole process has changed. When they go back in a second time. So what does that look like? I think part of it is this vision that the industry has set out for itself. And so I'll give you a seminal date. And,
Sure.
and there'd be natural evolution anyway, generational change, technology would allow things to change. But February 7, 2016 was the unveiling of Rocket's push button get mortgage.
Yep.
Incidentally, if you remember Super Bowl 50 more for that ad than Denver versus Carolina, you might possibly be a mortgage nerd. But
well, that wasn't a very good game, so
yeah. Must not be a Denver fan. But the event itself, I think, cast this vision that there would be a very simple process, and it's controversial to an extent. There was a lot of dialogue. The CFPB said we encourage homeowners to slow down and ask questions and quicken. Who owned Rocket at the time, said, well, it's it's our response to a slow and confusing industry. But putting away the whole that dialogue from a consumer perspective, there's this idea that there's not going to be a whole bunch of requests after an initial request, or that it's going to be very complicated to get data transmitted and so forth. And so I think that, Jim, from that whole event, there already was a race to automate internally, but these types of things that we're talking about, going back to, use of APIs and having a more confident ecosystem, because we know the data that's being transmitted is accurate. All of this is the back operation or the automation that leads to that consumer expectation of it's going to be a simple process.
Well, I think I talk about that data a lot, and I was actually thinking about it beforehand before you even brought it up, of that Super Bowl ad really changing things. And if nothing else, it was great marketing, right? Because everyone knows Rocket Mortgage, everyone remembers it. You have a big industry player like Wells Fargo being a horse and carriage, and now you're competing against them with a rocket ship. Come on, like what better imagery can you have than that? So, and I think one of the effects of that was the creation of what does a POS system look like in the mortgage industry. Everyone just started playing catch up, right? So, in talking about what actually gets people to adopt new technology and push forward, that's usually competition, right? Or external change. So the Rocket Mortgage was a great example of that. Our last 18 months is probably another example of a lot of external change that is getting put on folks, especially in the era of Zoom, which we're on now recording this. So how have you seen, over the last 18 months, folks trying to adapt that way?
Yeah. So, 4 years from the Rocket ad at the Super Bowl was February 2020. And I was in San Francisco speaking at the NMLS conference. We had no idea that, mere 2 or 3 weeks later, the world would change and still has not, won't be quite the same again. And from a consumer expectation in that era, people got used to doing all kinds of things that you never thought possible, not face-to-face, physically face-to-face, and including selling and buying companies. So certainly that was another, I think, propulsion towards consumers expecting that the mortgage is not going to require face-to-face interactions.
And how successful have lenders been at actually getting to that point where there aren't face-to-face interactions, there aren't wet signatures? I think I always like making the digital camera comparison to e-closing, where the digital camera patent sat in a vault for 10, 20 years until kind of Kodak was forced to adapt. The e-closing technology itself has been out there for a while, but the industry has not quite adapted. There's compliance reasons and other things like that. How do you see that changing? And where do you see the ball rolling, especially when you talk to clients who are tech focused?
Yeah, good question. I mean, I think that there's a certain number of mistakes and there's a certain number of things done right, but I would say it's not easy to be a lender and navigate all of this. And I would say there's more right being done than wrong. More times you get it right than wrong. But I think that when it's not as successful, it probably falls into a couple of categories. Either lenders are not utilizing their due diligence efforts in the right way. They may be spending plenty of time with the vendor, but they're maybe not asking the right questions, or they're maybe not properly future-proofing
Mhm.
the vendors or the decisions that they're making and what that entails. So those are
Mhm.
maybe sometimes when they're getting it wrong.
Well, how can you future-proof something, right, without knowing a pandemic's coming, or what consumer, if I knew what consumer expectation and habits were going to be over the
Yeah,
next 18, 24 months, I probably wouldn't be doing this. So how do you
yeah,
how do
yeah.
you
You and me both.
future-proof?
And I'm terrible at predicting things.
Yeah.
So yeah, don't look at me either. Yeah, that's where it gets to be not easy. But I think
Mhm.
that you can't predict a pandemic per
Right.
se, but you can generally pick a good partner, and plans are going to change, and growth plans
Right.
are going to change. But there probably is a general sense of alignment. Like, are we
Mhm.
well aligned? And can we as a lender also switch, or if we go down a path with a certain technology, are we in
Mhm.
essence stuck forever? And I think
Yeah.
that maybe speaks to the premise of your question. Well, how can you predict? I think it's because you can't.
Right.
Sometimes you need to have some flexibility as a lender.
Yeah. I think that focus on flexibility in your technology is really important. I spoke with I forget which LOS this was, but it was someone who basically comes in and helps customers clean up their LOS when things have just become a mess, right? And they're like the fix it crew for the company. And I asked them, what is the biggest problem that you see lenders having when you have to come and fix everything? And he said in a split second, over customization, right? Over optimization. So you really build something for one specific case, um, opposed to trying to be flexible and trying to be able to change things. So if you have a system that works really well for FHA refis, right, it may not work well when you're changing outside of that. So that's, I think, a good way to think of future proofing, of let's focus on the flexibility. Like, what happens when we add different business channels? What happens when we add new states where we work, or new employees, or scaling up? So um, I don't know. Are you seeing kind of that from lenders in terms of being a little bit better about analyzing things than they used to be?
Yeah, I
Mm.
think part of it too is when you approach things, and I'll give something that resonated from actually your value system. LodeStar has the
Mm.
three C's of
Mhm.
community,
Yeah.
clarity, and connection. Right. I think all
Yep.
of those apply actually in this actual question, because it's all about transparency, and then the utilizing that community. And I think there is quite a bit of um, leveraging the community that I see occurring now, where lenders are talking to lenders, and even
Mhm.
utilizing podcasts like this to get information, using social media and the such. Those are some of the areas I think that are
Mhm.
stronger today than maybe when things were done a little bit more siloed.
Yeah, and I think with that point, first off, I love that you spat the three C's back to me. Most folks I work with still are struggling to memorize them, so I really appreciate that. And I think the focus on connectivity is definitely something that's bigger and bigger, because it's very tough for any system to be all things to all people. So I'm always impressed when I see lenders come to me before they pick a new system, to figure out, oh, what are you integrated with? If I go with this system, what is my tech stack going to look like? What are my integration partners? Are you going to be in there? So I think that's something that's really interesting. And then, the number of lenders that try to avoid just going after the next shiny ball technology because they want to see how well connected everything is. And going off of that, do you find that lenders are viewing kind of their tech stack or their vendors differently than they have in the past? And what things can they be doing to get the most out of it that they aren't?
Sure. I would say if you're a lender and you ask yourself, is this important from a consumer's point of view, then you're asking the right question.
Mhm.
Um, a few months ago, there was a Forbes article that cited an ICE study that surveyed homeowners to get their view of the importance of tech in the mortgage process.
Mhm.
And we just talked about, the consumer side of things being, the focus. And it was a study that was done now versus 2018. And again, just looking at the perception of the value of tech investment. And spoiler alert, increasingly, consumers believe that tech should play a larger and larger role in the mortgage process. Some of the areas that that consumers cited were mobile apps, online applications, online portals, automation to reduce time to close, even reduction of in-person interactions, and then signing docs online and e-notarizing. I mean, these things that drive speed and efficiency, as long as there's not problems with the process or additional questions that get introduced to it. An interesting side note: when I was reading this, there was an inverse correlation between the size of a lender and the percentage of online apps received. In other words, lenders that had 200 plus employees had a lower rate of receiving online apps when they did the survey. But I think that in terms of benefit and how it relates, are they getting the most out of the tech stack? There was I'll cite one more blog. There was a Liberty Street Economics blog that is put out by the Federal Reserve Bank of New York, actually. And this came out 3 summers ago. So in other words, a millennia ago. But it was basically comparing fintech lenders to traditional lenders. And I think this will help answer the question: are you getting the most out of your tech stack? The fintech lenders, and it was fairly simple. They use sort of as a proxy online apps as whether or not you're focused on streamlining or having centralized ops, or focused on automation and such. But fintech lenders, over the course of the study, and it was a longitudinal study that went from 2010 to 2016. In essence, they came to the conclusion that yes, number one, they were closing loans faster. But number two, and this was maybe the more important point, the delinquency rates were actually lower, because there's some concern that maybe they'd have compliance issues or underwriting quality issues and such. And then the third item that was cited was actually a higher rate of refinances among those borrowers. Now, that maybe correlation doesn't imply causation. There may be a type of borrower that's utilizing them, so that may be a
well, and also wouldn't you get a lower delinquency rate with more refis too?
Right. Yeah. So, but I think the larger point, and this is whether or not there would be a pandemic or not, is that things are going to evolve, and so it's a little bit more towards moving to where things are going rather than where things are. And if they go there faster than you thought they would, it doesn't necessarily change the direction.
Right. And I think a lot of what you've seen over the last 18 months is just catalyzing things that were already happening in the industry, like digitization, move to e-closing, work from home type environment. I was on Zoom before the pandemic, but it's increased probably about tenfold over that time. I remember it was weird when you shared your camera and actually someone saw your face. It was a little bit awkward. And now this is just what everyone does. So it'll be interesting to see what that changes. And you talked a little bit at the beginning about being in the industry, 20 plus years. So speaking of a millennia, right, of industry time, you've seen the dot-com bubble, the industry really heating up, the Great Recession, now kind of industry getting back on its feet, TRID, the COVID recession or boom for the industry, a little bit of both. So, how do you think of those kind of ups and downs of something to plan for? Is it just sheer luck, especially in working with customers? How omnipresent is something like that?
Yeah, that's a good question. I mean, you're right. I mean, we don't know what the future holds, but you can, it's suggestive that there's going to be new challenges and turmoils and things that, folks are going to live through and have to fight through. I don't know that I have an answer to that. But I would say that I think staying true to your values will be it'd be, a good guiding principle for starters.
Yeah.
I think that, we talked about relationships, and I think if we're focused on our mission, what it is that we as an industry are doing, what are we as a
Yeah.
company doing, what are we as an individual doing, and then leaning onto that community side and the relationship side, it's going to allow us to pivot, hopefully as needed. And there's always going to be a course of, a dose of luck,
Yeah.
if you will, because that's, the things, sometimes you do everything right and things don't work out. And sometimes you succeed in spite of yourself. So
Yeah.
I would say, of those items, emotionally, not 9/11, is the toughest, but, in terms of, how the industry responded, I would say, probably the Great Recession, and, was the hardest to deal with, in my era, even more so than the pandemic.
Yeah, I think that, well, it's kind of different to comparing the two due to some industry factors too. But I just remember with both kind of the uncertainty around it. I remember it was probably 2008 when Lehman Brothers went bankrupt. I was in college. It was a job fair, and the Lehman Brothers booth at the job fair, someone put up a sign that said "Gone fishing." Right. And I just remember the uncertainty of what's going to happen. People were losing internships or unsure about going in and getting hired into an industry like this right now. And then I remember that uncertainty in March 2020 of, are people able to work from home? Is this even legal? Can we get into the systems? What's the future of mortgages look like? Are people still going to have to pay? So I think, that one constant is that change and that uncertainty. And I like your point earlier about kind of seeing the forest through the trees, of the long-term goal for the industry and where you think you as an organization will get, because that ends up being a good kind of guiding principle as you go through, as those changes happen. Because I find that I see a lot of companies that are a little too overreactive. I see some companies, they run themselves like they're at a craps table, and basically they keep on putting in money. Let's stay at the table as long as possible, and eventually that table is going to get hot, right? Just like March, April through the rest of 2020, the industry got hot, or shortly before the Great Recession and a little bit after, right? So if you keep on staying at the table long enough, things are going to get hot. I personally don't think that's a great way to run an organization. I think there's almost an opposite approach of, let's make hay while we can, but let's prepare for that downturn, for that uncertainty instead. Let's prepare for the worst and expect the best, opposed to expecting the best and then just seeing what happens.
I think some of the areas where you see that, strategy in excess the most is in marketing. Sometimes marketing dollars are, people will go all out and double down on it, and they don't necessarily have, what they purport to have or what they wish to have. And there's only a little bit of the fake it till you make it, strategy that ultimately works in a long-term relationship business.
I remember I started in this industry right after the Great Recession, and going out to conferences for the first time, and people telling me about, the glory days of the industry in the early 2000s. And people would say, "Oh, I remember when we used to give out cars at these types of things." And I just thought to myself, like, is that a good thing? Like, is that the best? So it's just funny how the kind of perspective of all of those things change over time.
Yeah. The parties, the unlimited budget parties, though, I do kind of miss that.
Fair enough. Yeah, I can understand. I never quite lived in that world in the mortgage industry, so I don't really have anything to compare it to. Great. So final question that I have that I like to ask everyone: what gets you up in the morning? What gets you excited to go and work on sales and marketing and mortgage technology?
Yeah, it's a great question, and I like the question because it's always been the opposite question, that I've addressed, especially 15 years at a compliance company. It's clearly what keeps you up at night, and the answer
that's
is
how I start with every compliance manager I talk to. But I think it's the question I gave you, but it's more fun to ask the positive.
Oh, absolutely. Yeah, no, the up at night is, risk is always in the forefront, but that's the better part now is what gets you up in the morning, because there is so much promise now. I think we're in the midst of a lot of change, and there's a lot of innovation. There's a lot of companies doing interesting things right now. And so it's exciting to be a part of it. In my case, I think that, on a more kind of close to me level, the people I work with are really ambitious, but also supportive. And so I think for anyone, lender, vendor, anyone in this space, sort of taking stock of who it is you're working, who's on your team, and who you're working with, those are critical questions. And being honest and transparent with one another. I'll this is a weird example, Jim, but I had recently we fired a client for using abusive language towards our people. And kind of an unfortunate thing, but I love that I work with a company, who puts our people first. And that's, community is only going to be lip service unless you live it out. And so that is actually, the promise of where we can go. And there's so much more that we can go as an industry. But that's the motivating factor. But then getting to do it with people that you enjoy working with, that absolutely pertains to what gets you going.
It's great that you're an organization that does that. There's always the old adage, the customer's always right. And I think it's a lot more complicated than that at the end of the day. And I've had to do the same of, I reached out to my point of contact at customers and said, if this person is going to keep talking to our staff that way, we're going to have to go in a different direction. So it's, I think it's important, and I think it's a good change to have. So, I love that was the note you ended on, as someone who's partnered with your company during the pandemic that we launched it. You guys have been great to work with. We really value the partnership. So thanks so much for coming on, and hope to hear from you more in the future.
Likewise, Jim. Thanks again. It was a pleasure.
Thanks a lot, Dan.
Thank you for listening to LodeStar's Lending Leaders. I'd like to give a special thanks to Brian Rieger and Elena Gardner, who help us create this podcast every week. Please remember to like and subscribe the podcast wherever you listen to it. It helps us a lot. Thanks. Talk to you next week.